Hi, good morning. My name is Kaysian Gordon from Kaysian Financial Planning. And this morning I want to talk to you about a topic that's come up quite a bit in the last few weeks with my clients. The topic is my money safe in the bank? Now, we've been hearing a lot in the news about potential bank failures or banks going under or companies being bought by other banks. So we heard with the SVB, Silicon Valley Bank, Signature Bank, First Republic having issues, and even Credit Suisse being bought out by UBS over the weekend. So there's been a lot of news as to whether banks are safe. Now, one of the things that banking regulations changed after the financial crisis in 2008 into 2009 is the FDIC insurance limit. So if you have $250,000 sitting in a bank, that amount is insured. And as we saw with what happened with Silicon Valley Bank, not this past weekend, but the weekend before, where the government basically guaranteed that even if investors or bankers, clients had more than $250,000 in the bank, that those monies were going to be available to them. So the bank went under basically on Friday afternoon or when it was announced, and by Monday the clients were made whole and they had access to those funds. So if you have $250,000 or under in one bank, in one entity, and that means you can have it either in your what's called your personal name or in a retirement account or whatever else, those count as different entities. So you can have even more than $250,000 in your bank account and still be okay. The big question, though, is why would you have that much cash in your accounts, right? And for a whole host of reasons, right? It might make sense to have that level of cash, but at a certain point, you have to look at what are other opportunities out there for your cash. If you're in a cash business and you're dealing in a lot of cash, and that's the norm, then you understand those potential risks. However, if it's just you're not comfortable having investments or whatever else, there are other potential downfalls to just sitting on a lot of cash for a very, very long time. And as we see, inflation is one of those risks. So it's important for you to assess where you are, assess how much cash you have sitting in the bank. And in one of my more recent videos, we talked about being able to earn more in a bank account that will potentially earn you more than the 0.2% that you've been earning over the last many years. So it's also taking a look at those banks and whether it makes sense for you to be able to get some more interest on versus what's been being paid out in the markets. So again, I hope this has been helpful for you. Your money is insured up to $250,000, and the government knows that the potential impact if even if you have more money than that in a bank account, what the ramifications would be if that money were to just basically disappear. So the government is making all the backstops to make sure that those funds are protected. So is your money safe in the bank? I'd say so at this point. And if it turns out that a bigger problem is happening, I think we would all be affected on a larger scale. So I hope this has been helpful for you. My name is Kaysian Gordon from Kaysian Financial Planning. And if you have topics that you'd like me to cover, please leave them in the comments and I will be sure to try to answer those questions for you. Thanks, talk to you soon, bye.